This is the talk of Music City Real Estate.
Welcome back to another episode of the Talk of Music City Real Estate,
where we educate and motivate all things real estate.
My name is Monte Mohr with Realty One Group Music City.
Hey, and I'm Carey Ann with CMG Financial and my mortgage team.
Every week we'll be posting a new episode chock full of Nashville real estate value.
Yes, and you can follow along and subscribe at talkmusiccity.com.
Got a question for us? Ask away at questions@talkmusiccity.com.
Monty.
Carey Ann, so good to see your smile.
So good to be
always.
here. Love it.
We're going to have a fun time today talking about all things mortgages.
We are.
You know, it's a constant change, constant pivoting. You know, we were saying earlier, sometimes I feel like a ballerina because I'm pivoting all the time. You know, it's got to pivot some more.
Well, you got the legs to be one, so there you go. Too funny. Well, you know, so true. I mean, I've been doing this business now over 20 years, and it is crazy.
Did you start when you were 3 or what?
I know, right? Love you. But you learn something new. The guidelines change.
Yeah.
There's a new program, right, that you have to be ready to understand. Why does one person who takes, or the client has already started the process down the street, per se, and gets denied, and then so-called comes to Carey Ann and gets approved? Why is that? You know, I do think a lot of it comes with knowledge and studying your craft, right? We talk a lot to real estate agents out there about study your craft, you know all the things real estate. It is so important for you to know enough to be dangerous when it comes to the mortgage side. And it is really important to know that there's 3 different types of lenders out there. We talk about that a lot. I think that's important to know, especially when your client calls you and says, hey, I've been talking with mortgage company A or mortgage company B. I was going to say some names. We don't want to say that. But it could be an online, right? It could be a local. It could be a national. It could be just a very small. But you're going to look at 3 different types of mortgage lenders out there, right? You hear of the brokers. Those are the people that started their own small little company, and they're brokering in with other companies, right? And so if you think about that,
they really have no say-so how things are done, are they?
Right.
They're totally at the mercy of whichever one that is.
Yeah, and so
it might be a cheaper rate.
Correct.
But it's going to be no certainty at all.
Right. There's a lack of control, right, within that individual. And we just recently experienced one transaction that was with a broker 4 weeks past the close date, right? And that we got the call and the agent was just crying on the phone. And, you know, it's heartbreaking when it is your client, but when it's your family member, to make that even more heartbreaking. But luckily we were able to pick up the pieces and get that one closed in 8 days. So that was a huge win. You've got your correspondent lending lenders out there, which are basically lots of lenders here within Middle Tennessee are correspondent lenders. They basically just sell their loans to another lender. So they have something called overlays. And so you're going to see your FHA, your VA, your conventional products, USDA products, but they may have another overlay on top of it.
Meaning it's more difficult to get that approved. Right?
Yeah, they only want credit scores between blank and blank. Their ratio requirements are only this. You know, they do have something, just that extra layer of protection to make sure that they're good to go.
Protection, you mean difficulty like protection?
Yeah, I think it's because they're getting their financing through another bank. And so that bank is going to say, hey, I'll give you the money, but I want it to be a little cleaner than possibly what a direct lender. And that's what we are within Carey Ann and my mortgage team, directly to FHA, VA, USDA, Fannie and Freddie, which is when the agencies allow it, we allow that. And really what we're looking for is the client's ability to repay. And I think that's important for agents to know about that, because you and I don't want to give just loans out there, because at the end of the day, if they don't feel comfortable paying it, they're not going to pay it. And then when they don't pay it, they end up foreclosing on it. And that's a bad name for both you and I. And really, it's devastating for the client. So we never want to do that for them. So we would definitely want to make sure that the client shows the ability to repay.
Chrissy, I keep calling you Chrissy. Carey Ann.
Okay.
Carey
She
Ann.
is, I would love to be her. She's amazing.
Chrissy's amazing. But no, Carey Ann, what amazes me sometimes, and I know this has got to be amazing to you. So I don't understand. I mean, I told this to one young man one time. He said, you know, I use this lender because I get to go to his house for peanuts and popcorn, you know, and he's got a really cool TV, you know, kind of thing. But when it doesn't make it to the finish line, then I bring it to Carey Ann, and I said, how important is your reputation?
Yeah.
You know, I mean, why start with somebody you know is not the best? I mean, I'm sure that sometimes our agents are saying, thinking I get something out of this by promoting you. I just get the confidence that, I'm recommending somebody who's best in the business. So,
well, it wasn't easy to win over you. I remember the standards were really high back in the day. And I think we've been friends and business partners, kind of partnerships within the business 10 plus years, right? Because you're coming up to your 10-year wedding anniversary. And I remember that day.
Were you and I pre-Connie? I forget.
I think we were somewhere.
Same time?
Yeah, same time there.
Yeah, you heard the announcement today that I'm getting married?
I love it. You should remarry that gal. She's a fabulous one. And if whoever handles you and I, they're most amazing. I think to find our other halves.
That's right.
Because we're definitely a lot. And I think it just goes back to your craft so well. I know my craft really well. I think being a gal that grew up in this business and took a piece of paper back in the day and said, figure this out. I think that is what makes you and I stronger today within our industry. We know all things. For me, mortgages. I live and breathe it. I'm they call me the lone whisperer or the rain woman of mortgages. That's just because I just know it. It's the problem solving of it. And yes, are there people that, throw shiny objects to turn your head and offer you the lunch and the dinner and the gifts and all the things and the donuts or possibly the peanuts like you referenced and the popcorn. Make sure it's extra buttery there, But it is important that you ask. You are the CEO of your business. Yeah. It is important for you to ask all things to lender A or B, right? Make sure that they're answering them with confidence. Make sure that they understand what they can actually do for you, not just provide, meals and things. At the end of the day, you're looking for that confident, trusted, local lender. And I kind of giggle because I was with another group and they weren't local. And I said, hey, normally I would be the gal saying, talk to that local lender, but I'm a gal that you can trust, woman of her word, whether she's local or not. We're not going to take on something that we can't deliver. And I think that's really important. But every scenario that you run across, and especially in today's market, is so important. Mm-hmm. Before, there was so much business that whether this person can get approved or not, you were helping the next, right? It was kind of just moving. The process was going so fast. And now everybody who's excited to buy real estate, we want to find an opportunity for them. And I think that's important when it comes to, the financing. Cash came in really fast. There's a lot still of cash opportunities out there, but maybe not as much. So I always kind of giggle, put me in, coach, and financing is back in, which I think is a win. But knowing all things, mortgage financing is key. So you've got conforming loans, which is your VA, FHA, conventional, and USDA. And then you've got your non-conforming loans, which are kind of those loans that are a little more off the beaten path. We talk about bank statement loans. Mm-hmm. We talk about no doc income loans for investors. We talk about first lien equity lines. We talk about asset depletion loans. So there's lots of options out there
that are mortgage. Is that an asset depletion?
Yeah. Nope, that's a reverse mortgage too. Okay. I think that's kind of similar. An asset depletion loan is where I'm able to take all of your assets and then divide that over so many months and use that for your monthly income.
Really?
So that's a huge win as well. Wow. We had a client that called us, a real estate agent actually, and had so much money to put down, but she didn't qualify because of her income on her tax return. So what we did was we had her put less money down, use the difference of those funds and use that from an income source for qualification purposes. And then after closing, did a principal reduction. So she did end up creating the same result she wanted on day one. We just had to change that.
Wow.
And I think that's where the problem solving, right? Creating those solutions is key. There are some people that have been in the business only a few years, but they study their craft, and I would put my stamp of approval on those loan officers. There's others that just fly by the seat of their pants and will figure it out when the transaction comes to them. I think I would probably pause a little bit on that, because if you are the true CEO of your business, you want to grow your business like a business. You want true professionals that are in it to win it with you all the way.
We all know, Carey Ann, that any of us in this business of real estate are only as good as those we surround ourselves with. And there's probably, I know there's not a more important ingredient than the right mortgage professional. You can get by with a lousy painter once in a while, or even a title company that forgets to smile at closing, or maybe shows up late. But the mortgage part of it, that is critical.
Some people say, why do you just want to take, this? They don't realize that I help so many on the front end, right? I've been able to open the doors by being the gal that meets people for the first time because they help save their transaction. Mm-hmm. But it does build that relationship for future business. And it allows me to continue to grow, to be top within my field, within the state, and also the company that I work for. But it is important to know all things. If you've got a client that is fully commissioned, right? Some people are going to say you need 2 years. I only need 1 year, right? You're going to see some people that say, I've got a 560 credit score and somebody needs a 600 credit score, on a VA loan. Well, VA loans don't have credit score requirements. They also don't have ratio requirements, right? And so knowing the ins and outs specifically on how to help them. You may hear that the individual was denied THDA. Well, then how did Carey Ann approve a THDA loan with that specific client, right? It's just important to know, did they actually get denied by the true agency, or did they get denied by the company that was going to use loan A, B, or C, right? So let's talk about THDA, because I'm excited. I'm always blessed to be one of their top loan officers every year. They give me the award. Last year they called me Carey. I said, I need you to remember who I am. I think on my license it's Carey Ann Cyr. So they always kind of cut it off on the front. It was kind of funny when they presented that to me. But I was very grateful for the award, being one of their top originators last year, which meant I served so many first-time home buyers, right? And I think serving that community is really important, because if you are a real estate agent, let me tell you, those are going to be your clients for life. If you really take care of them on the front end, they're going to right now get the lowest of all lows from an interest rate standpoint. Now, they do deserve the right to change that rate up, down when they want to. But currently, that interest rate, and I'm hopeful that we're going to post this sooner than later to get the word out there. But their interest rate's under 6% right now, 5.875 on a 30-year fix with no origination fees. Wow. I think that is amazing. Wow. When it comes to that, awesome. No points. Yeah, when it comes to that.
Now, there's a limitation what they can.
400,000. I still think that's great, right?
Oh, yeah.
I mean, for our area, those people within Middle Tennessee, there are some income requirements, but I mean, if you're looking at certain areas and you have 3 people in your family, you're over 6 figures. So I think that's another win. You do need a 640 credit score. I hear a lot of people get denied because they have a 638. They come to us. We work on boosting that credit score and we move them along and get them approved. The ratios do need to be at 45%. But here's one thing that I think is amazing that we should really shine bright with, which is their Homeownership for Hero program. This is loving on the police officers, the firefighters, and those can be volunteer firefighters, your EMT and your paramedics, as well as all of our veterans. We're really just want to continue to love on those that continue to serve our community. Now, if you're a first-time home buyer, now remember, what is a first-time home buyer? Do you know what that is, Monte?
Someone hasn't bought for 3 years, 4 years, 5 years?
Okay, close. Yes. So hasn't bought or hasn't lived in a home that they've owned for the last 3 years. So
3 years.
I inherited a home from you, but I've never lived in it. I'm a first-time home buyer.
Wow.
So if I can prove that I've been renting for 3 years, even though I owned a home, I just can't live in that home for 3 years. So if you are a true first-time home buyer and you fit within the HERO parameters for their program, you can get, this is crazy, 30-year fixed mortgage right now for 5.375. 5.375.
Wow.
So if interest rates were a concern right now out there, this is the time to definitely buy if you're a first-time home buyer and work with one of the amazing agents out there. And again, real estate agents that are listening, take this data. This is definitely a way to turn ahead, don't you think? Especially if interest rates are the concern out there. So that's a huge opportunity as well to open doors. Our investors, we just hosted a great class, all things investment financing. We just launched our investment financing collection, which is 5 different types of financing options for your investors. And I think there's 3 different types of investors out there. You've got your first timers, right? That want to be able to make a little bit of money to offset some other things. You've got your short termers and your mid-termers. Mid-termers are the folks that are renting now to your travel nurses, right? That have that locked in income that's coming in, so you know that it's going to be paid timely. Your short termers, they've been battling permits and things like that, but again, that's still out there. And then you've got the folks that are just looking for true appreciation, right? Higher interest rates right now are keeping prices, at bay and or lower. So you might be able to get a good deal knowing that when rates start to dip, what's going to happen to the prices of homes in Middle Tennessee, right? They're going to start to move in a forward direction, probably faster. And maybe we'll see another whole, whirlwind of that, right? And so knowing that your investors really want to take advantage of just the appreciation, they can do that as well. So we've got our Investment Pro Plus program. This is a huge in-house product that you may not know about. It's a private label security loan. It is 15% down, 680 credit score, and it allows me the opportunity to use 75% of the projected rents on that particular home. So if you are a first-time investor, this allows you that capability to help with your qualifications if you're a little nervous about it.
Is that based on what's the credit score again?
680.
680.
Yeah. And that's what you want too, because, interest rates are based on credit scores. So the higher score, the better. But again, this program, back in March, you may have heard that Fannie and Freddie made some changes to their loan level pricing adjustments. So you saw that everything kind of skyrocketed for your investors, your second homers, all those things. This program removes that on those hits. And so you're going to see that you have lower cost and also lower interest rates on this particular Investment Pro Plus program, which is a huge win for all our investors out there. Now that's a full doc loan. So I'm going to ask for your 2 years of your life, whether you're self-employed or W-2. But if you're somebody that possibly does not want to show all things documentation, our no income doc, all cash flow loan is definitely shining bright out there for those, which means you can't show tax returns because you don't show any income on them and you're self-employed, or B, you just don't want to provide paperwork, right? You've got those 2 different types of clientele. And this gives you the opportunity to not provide anything, whether you're W-2 or self-employed. It's just focusing all the attention on the cash flow of that particular home. And so we want to make sure that you have at least a 10% gain on the rents associated with mortgage payment. And if that's the case, you're good to go on that particular
10%
program.
More than what you're receiving.
Correct. Right. And so again, that does range with the amount of money you put down, but it only requires 20% down.
20%?
Yeah. And so
That's
yes, as you ask less questions, your interest rate is going to be a little bit higher, but it goes back to, what is the purpose of this purchase for you, right? A lot of investors are looking for cash flow. And so they may be purchasing in a place that they know rate is not going to be a concern, because what goes up will come back down and you can refinance, later. You're looking at getting a great deal on this house, the appreciation of the home, and also not have to worry about your, showing any of your income documentation. If you're somebody who's self-employed and you can't show your tax returns, but you want a little bit of a better interest rate than the no doc loan, we've got a 12 and 24 month bank statement loan where we take all your bank statements and we average your deposits, and there's a little formula that we have to work within that, but that's another huge win for our folks that are self-employed. And I will share, and this is a product that you have because you can use it on your primary, your second, and also the investment purchase, but it's going to be our first lien HELOC, which focuses on principal before interest, and it's called our all-in-one product. Are you been enjoying that product?
It's been really, really handy. It really has. It's to me, it makes a lot more sense than a reverse mortgage for an old guy like me. It can literally pay for itself, but it's really been, we did it with our second home in Florida because we wanted to build the ability to pick up a deal if one became available. And also not have to have that large
amortized loan.
That kind of situation. So anyway, Yeah, and we're enjoying it. Absolutely.
Yeah. Well, and it's the only loan that focuses on principal before interest. It also is the only loan that gives you and grants you access to your equity for full 30 years. And that's what he's talking about, right? And so having access to that equity, when you pay it, you don't pay on anything if you don't owe anything. But if you want to pull it at any time, you have the capability of doing it. It's the only loan that never defaulted or has never had a default or a delinquency since its creation in 2005. It also is a huge win for all those folks that lost their jobs through COVID. They were able to kind of stay afloat because they were able to kind of live off their equity at the time that was needed until they got themselves back on their feet. So that's a huge win. Investors love this program because all the rents automatically are pushed towards the principal and really starts to create lots of momentum. If you think about an amortized loan, you're paying most of your interest for the first 10 years. This gives you the opportunity to focus on that principal and starts to kind of just really work towards gaining even more wealth and or paying down your principal, which then you thinking about being an investor, you're going to leverage what you have, and then you're going to take the equity and then you're going to use it as a down payment and do it again with the next investment purchase. So that's a huge win there. And the last one is hard money. So sometimes you just need short money and you don't qualify for anything, but there's a reason why you're purchasing this house, and we can connect you with some great hard money lenders as well with that. So relationships, we talk about that in different types of classes. I think being connected with so many that can help you out there is key. And I think that's one thing that we do really well at Carey Ann and my mortgage team is we're well connected with our local bankers, whether you need commercial financing, whether that is a loan that cannot meet the warrantable standards of this or that, even from a non-conforming loan. I helped facilitate an entire condo complex through a bank here and made sure all those closed timely. And I didn't make $1 off of that. And it's not about that. It's about making sure those relationships and those real estate agents are well taken care of, because I'm in this business for the long haul. I'm not the hare. I'm the tortoise, right? We're here going to win the race way at the end. And I think providing and giving lots of value and education and that knowledge on who to go to, I think is that's key out there in the marketplace. But all things mortgages is what
How do you keep track of all that stuff? You know?
Yeah, I think it's because I'm Rain Woman or something. I do have a learning disability, which is kind of interesting. And I think when you have one thing, I think you shine bright in others. I can't really read very well. I read a lot, but it takes me a lot longer with a comprehension piece. So when you see me reading a lot of books out there, and I have to reread those chapters or pages over and over again. And probably I would do better with the audio. What did I say? Yeah. Audible. That's it. That's what I was trying to say. To kind of have it really, process in, but it's all memorized, right? And I think the scenarios, John's scenario, Sue's scenario does repeat itself in a different form every time.
There's only so many scenarios probably.
Yeah. And just knowing those in and out. People ask, how do you close a loan so quickly, right? We talk about process and systems within our businesses, and that's what we have. I think there's a beginning, middle, and end. And I think we're only as good as the people we surround ourselves with, and really finding amazing talent that are like-minded, that believe the same thing, that understand that it's not about you and I, it's about the client, right? Some people say, I heard this the other day, do you help clients under 200,000? And I was so confused on that. I was like, people question the loan amount, right? I think it's just an opportunity to help anybody, right? And so we served a client the other day. We don't look at loan sizes ever. It's just their scenario, and their loan size was 106,000, and they got the same treatment and the love that they deserved, There's whether it was $1 million, it does not matter. Because one starts, they eventually will have a different type of loan, and it's all about the averages. It's just about being able to serve our community, and doors open the more that you serve. And so not just loan size doesn't matter. I think just being really well educated on that. So going back to the systems and the 8-day closings, why? Well, why not? People say, why do you want to close so fast? Well, why not? The law allows me to. You've already delayed your closing. You've called me that with a transaction that's falling apart. You want to meet the closing date. And it just so happened, I think this was where my first transaction started. It just so happened to be that it was 8 days later. And I was like, well, the law allows me. Let me figure this out. And so I kind of backed into it. And when you have great relationships with all departments, I think that's key. Another podcast that we talked with on new construction, it was all about like learning, the different divisions within real estate, whether it's homes, new home sales and all the things. I think that's important for us, me being strong and having great relationships within secondary, within the closing department, within this and with that. I think that's important. And 10 years ago, when I decided that I wanted to bring CMG Financial from California here locally, and I remember I could have gone with any lending institution when I decided to make a change. There was a lot of great lenders here, but I wanted to bring somebody that had no name, that I could create a name for, and a reputation all around, and then do it my way. The thought that I had, which was different, because lending was always doing it the same way. I was waiting in a line. I was having to get permission to do this. And I was like, that's just not going to work for you and I if we want to be super successful. And so I learned the parameters of what was allowed. I found a back engine within CMG, some amazing operation folks, and then we built something from the ground up. I think that has been lasting, because we just this July was 10 years too.
Really?
So it's just amazing that we've been kind of going so full speed.
I think I came to your original open house. I think it was about 10 years ago. Yeah,
that's when we met. Yeah. Actually, you walked in and said, I was supposed to meet you. I'm here to meet you, I think. Yeah. Somebody introduced us, which I think was great. And he gave me a run for my money. Yes, he did.
Well, I think I've learned the hard way that you don't throw your best deals at a new lender. You give them a tough one. Here, can see if you can do something with this one. And you shocked me by getting it done way ahead of time. And so I threw you another tougher one, and just think, let's see what she's really made of. And boom, you got that one done. It's like, okay, I win. Whoever else I was using before, it's all yours now, whatever we can do.
I love that. Well, and being able to do the tough deals, the easy deals, I always say we love all people. We love all homes, because let me tell you, Middle Tennessee, we've got some homes here, right? Berm. What do you got? What's the berm home?
Under the dirt.
See, look at that. We've got manufactured home. What's that?
One with wheels on.
We've got a modular home.
You asked me that question. Yeah. What's a modular? It's put together before it gets there.
Yeah, it's made in a warehouse. We've got your condos, we've got your townhomes, we've got your stick-built homes. We've got so many different tiny homes, right? We've got container homes. I could go on and on and on and on, right? So I always say I love all people, I love all homes, I love all credit profiles. Keep in mind, I've had a life, you've had a life, we've all had a life, and so judging anybody with a credit score of this or that doesn't mean sometimes that they had bad credit. One minor tick can change that credit score so drastically that we don't judge anybody, and we really just try to find and create the solutions around it. And we always say we love all real estate agents giving us the opportunity to serve. I do think there's a lot of good people out there. There's always going to be a few in the crowd and we have them in the lending world. But when we all work together and we understand the true heart behind the person, I think being in this business for 10 years and giving my all every single day, and still wanting to continue. I have a 10-year-old, so I'm not giving up anytime soon. I'm excited to continue to
So you started your business when you had a baby? Is that what I'm hearing? After Aubrey. Well, the story goes, I lost my job after I had my little one, and I had to recreate myself, and that's where Carey Ann and my mortgage team was created. And so many months later, that's when we brought CMG to town. So I say that the worst thing that ever happened to me with losing my job was the best thing that ever happened to me. And I will tell you that, just proof that tomorrow's a new day. It really is. And
and you can do anything you want to. I mean, I always tell you that story where I was at the back of the room saying, one day I wonder if I'll ever be in the front of the room, and look at me now. And it just takes one transaction, really successful, meeting one amazing person out there, that can open a door for you. And I'm grateful for our partnership and friendship over all these years, and the many ones that I have with all the real estate agents, that watch this podcast, and that I get to meet. And there's new people. I just got a call on my way in here. I heard you are the best. I need to meet you. That gives me goosebumps, right? It means that, and that person's calling from Clarksville, and I'm not even, in that local area. I think when you build a strong reputation, and I'm grateful for my two parents. My mom is still rocking her 411 sparkleness. She drilled, you have to be a woman of your word. All you are is a woman of your word. When you lose your word, you don't have much. And that's one thing that I've always kept, strong. And I think that's keeping us moving in a forward direction. But know your craft. And remember, you are a real estate, you're the product with a side of real estate. So I'm the product with a side of mortgage. So you're buying into Carey Ann, right? Those people are buying into you with a side of real estate. And so I need you to know all things about me and just know that, I am driven. I'm a force to be reckoned with. I'm a gal that will get the job done. And one person that really enjoys having a lot of fun. Till we have a good time. I like to laugh and I like to smile and bring joy into the day, because this business I'm already blind because of this business in one eye. It's stressful. We got to have some fun doing it. So
you're amazing, Carey Ann. You're amazing.
Good stuff. But if I can ever help answer any questions out there, all things mortgages, no, there's no challenge too big out there. There's no scenario that can't be solved. No, we may have to wait a little bit. One client called the other day and said, I was told I had to wait 18 more months, and I told him only 3. So if it may be a wait, but it may not be as long as what you've heard out there.
Look, gang, let me just say this from the old guy, okay? 39 and a half years, it'll be 40 years this December in the business, thousands of homes. I don't say that to boast, only to qualify that I've earned the right for an opinion. You're only as good as you surround with the vendors you surround yourself with. Don't use Carey Ann as the emergency, problem solver. Give her the grace and opportunity to be number one, as I have, and I've never regretted it. And I'm as probably as cynical and critical of our vendors as anybody is. So we're only as good as our reputation. You only have one. So lead with the best is all I'm going to say. I don't have a dog in the fight here. Okay, I only want the best for all those that are taking the time to watch what we're sharing. But we're sharing from our hearts always to bring added value to your world. Okay, our goal is to raise the bar in an industry that has had multiple black eyes, and unfortunately in some cases rightfully so. We're trying to change that. Okay, your client's going to have a lot better experience with the right people. Make sure the right people are involved.
I love that. Yeah, continue to ask lots of questions, stay super curious, and find that lender that knows what they're talking about, because you will shine bright when every transaction closes on time. So thank you everybody for joining us here today. You've been listening to the talk of Music City Real Estate.